Everybody, this is a special on the euro dollar. The euro dollar is approaching a very, very important level, the par level, right? It's a very big number, one with 4 zeros. So that's a very important situation, and that doesn't happen quite often, right? Let's zoom in here on the monthly chart. Well, we got close there to this level. You see, if we go back years, well, that was back here in 2003, right? So that's many years, and we got close there a couple of times here, right? Got close and got closer, right? And we could not reach or even get really close to the par level. Well, this happened just a couple of days ago, right? And this is an important event. What we see here is that price fell really hard, like with a lot of momentum down to this level. And we try to go through the level. We can see it here with this wick, right? This bottom wick goes slightly through, but there was not enough power for the bears to actually break through this, right? This is kind of an area level, like above and below this line. Well, the bears have to break through. This is a resistance area, right? And only going through a couple of pips, we can see it here, right? How it went through a couple of pips. Only going through a couple of pips, well, it's not enough to trigger stop run levels. Like beyond such a level, there are always a ton of stops, right? Just think about the like long investors, for example. Well, they have their stops, right? Below these lows. Well, they might have gotten triggered with this move, and there's a big number of people as well who put their stop like on the other side of a big number, and that's the par level, right? So there are a lot of stops here of long investors, well, who would liquidate their long position, right, in the euro dollar once price breaks below this. Well, we've not been able to run those stops. Well, if those stops get run over, well, then we get a quick move towards the 09 level, well, even below, I think, because there's so many stops where you would get a really big red bar or a series of good-sized red bars. So this is an opportunity, right? If we break through, we get a couple of big red bars. Well, this can be traded in lower time frames. So this is what we look for. But this situation is interesting now too, right? Because we have not been able to break this level. So it's resistance on the overall way down. We are overextended from the moving averages. So we could expect now a snap back as well. And let's just let's just go back a little bit. Well, back here we had drawn this error, right? So when this level breaks, like here, well, then we can expect a run. Well, this is what we got, right? We got a run, and the minimum target we had seen back then. Well, the minimum target is the par level, right? So we have completed basically the first target. So why was the break of this level? Why was this important? Well, it's another big number, 1.08. If you go back here in time, well, we can see that, well, there was prior price activity, important price activity, right? So that as well acted as a resistance on the overall down, and once that broke, well, we saw this other wave down. Now let's see what happens. What might happen in now to come. Well, we've seen the down move. Well, now we might actually see an up move, right? Bears were not strong enough to break this important level. Well, if they cannot go lower, well, the market tests higher. That's what typically happens. We are overextended here on the monthly, right? Way overextended. So where could and this is the monthly bar, right? So we're in the month of July 25th. So in a couple of days, this bar will close, and this very much looks like a pin bar. Like a rejection bar at an important level, right? Not only an important big number level, but this level is important because we've got a quadruple bottom here, right? So we could really nicely snap back. This is the range, right? From down here, par level, to up here. Now this tested the range, right? This went outside of the prior range, which was this bar, this line. So now we could see a snapback. So where does a snapback go in a range? Well, it could easily go to the mid-range, right here. It could go as well to the upper range, up here. And like another logical target is, well, it bounces back to the 21 moving average. which is a very important dynamic support and resistance. So the idea now is that it could easily bounce to the 110, 115 area, right? If the bears are not able to break lower, well, especially within the next couple of days, well, then this becomes a pin bar, and we might get the snapback to moving averages to the 110, 115 area on the monthly. Now let's have a look here on the weekly. What does that mean? Well, to the 110, to the 115, so it's around this area. So that would be, let's just draw a target area, basically here, right? So that would nicely cluster with the 200 moving average. So that makes a lot of sense, right? So price could bounce, it could break through the 21. Remember, we were way overextended on the monthly, right? So we might see a powerful snapback going beyond the weekly 21, and then actually find here, resistance to the upside around this level, or it could run and run and run and actually re-break this important level. So let's see now what's going to happen. Now let's just trigger a little bit down the time frames. Now on the daily, well, that looks still very bearish, right? Well, let's take out this. That looks very bearish, right? So currently we're at a hold here. Well, why is there a hold of the bulls? Well, because they're meeting resistance from the 21, right? Nicely, we can see how price is squeezed between 8 and 21. Moving average is nice, right? How the wicks try to go, well, they go beyond slightly, and how the bar opens and closes are nicely restricted within the band. So this is another nice example on how the band, right, 8 and 21 exponential moving average is important. So we see basically a balance point between 21 resistance and 8 support. And we'll see what which way we go, right? So the next thing basically is, if on the daily we're breaking the 21, well, then the next level, logical level, is the 21 here on the weekly. And should that be broken, well, then this becomes the target area. But we might still break to new lows, right? So basically we've got the opportunity now on both sides. We could break lower here, make a big run beyond the par level, or we could get a powerful snapback. That's an interesting situation, right, for both long and short. Now let's have a look. This is always interesting. We see a consolidation of small bars, right? That's a volatility contraction. On the 240, well, that's a consolidation. Well, now I'm getting even more interested. This is a momentum move. Well, this is a consolidation. Well, on the 60, well, we see the consolidation more clearly, right? We can draw a line, which is quite clear where to draw it, right? We've got here all those touches. Well, it looks like an S1 type, right? But it's not high quality. We've got a good line, but we've got a lot of activity, a lot of volatility, a lot of white space. So that's basically if this is a TC pattern, well, that's basically an S1 of below quality. But we will see. We've got another 2 touches now above the line. Like, if the bulls are able to make this run, I mean, we have these stop run levels, right? If the bulls are able to make a low quality TC pattern run, well, this tells us that there's a lot of bull strength in the market, right? If they can make a low quality pattern run. Now this looks this looks okay here. Well, TC2 obviously is not yet in an uptrend, right? So this is all, well, that does not fulfill the rules, right? But still, on it as a TC pattern, it is an S1, but it's not in a trending environment. So we see if this is a consolidation that goes higher, or whether this is a consolidation which is basically only a pullback here, a pullback to the 21, it's a rest, and then breaking lower. So the market will tell. We'll just see if either this low, right, gets broken lower, or whether this high gets broken higher. And this will tell us about basically if this scenario might play out, or if that scenario play out in both ways, or we can capitalize on the opportunities there are in the market. Thank you.